So hi guys, I'm Someshwaran son of Sivan. I'm the leader of the group and my team members name is Abu Zarif, Shakthi Sharmili, Yuvaraj and then Mathash. Today we're gonna present about account transaction, which is journal entries until financial position.
Everyone, my name is Abu Zarif, and today I'm going to explain to you guys how to record a journal entries, a fundamental concept in accounting. A journal is the first step in the accounting process where we record business transaction in chronology order. Let's learn how to do it. Before we start, I want you guys to remember the golden rule of accounting. The first is debit. Debit is what comes in. The second is credit, what goes out. For every transaction, there's a debit and credit. They must always balance. For the journal entry, you must have the account details, debit and credit. Debit must be at the left, credit must be at the right. Let's do some example question. Imagine the company purchased office supplies for RM 500 in cash on December 10, 2024. So, office supplies are an asset. So, we debit it as it increase. So, December 10, office supplies 500 on debit. The second thing is in cash. So, cash is credit because cash also is an asset, but it decreased, so we credit in cash 500. To summarize of the journal entries, every journal entries has a debit and credit side, and the total of both sides must always balance. Think of the journal as the first place to organize transaction before they move to the ledger. Practice with more example and soon journal entries will feel like second nature. Thank you for watching my
Hi everyone, today I'll be explaining this ledger account for prepaid insurance. So let's break it down step by step. So the first step is what is prepaid insurance? Prepaid insurance is when we pay for an insurance in advance for future coverage. Since it benefits the business in the future, it is recorded as a asset in the books. Okay, now let's look at the TA account together. On December 5th, 2024, there is an entry under the debit left side. This description is premium payment and the amount is 1200. This means the business has paid 1200 upfront for insurance. Okay, remember asset increase on the debit side. Since prepaid insurance is an asset, paying the premium increase this account. So at the end of the period, the balance of 1200 is transferred to the balance carried forward on the credit side. So the credit side is on the right side, and this simply means the ending balance will be moved to the next period. The beginning of the next accounting period will start with this balance of 1200 on the debit side as brought forward. It's showing that the business still has prepaid insurance worth 1200 for future use. In short, 1200 was paid for insurance and recorded as a prepaid asset. It is carried forward and brought forward to ensure the balance is correctly tracked in the next period. Okay, that's all for the ledger. I hope this makes the prepaid insurance ledger clear and simple. Thank you for watching.
Hi everyone, I'm Shakthi Shamli and today I'm going to explain about what is trial balance. So here we go. What is trial balance? Trial balance is a report that lists the balances of all general ledger accounts of a company at a certain point in the time. So the accounts reflected on a trial balance are related to all major accounting items, including assets, liabilities, equity, revenue, expenses, gains, and losses. It is primarily used to identify the balance of debits and credits, entries from the transactions recorded in the general ledger at a certain point in time. So here we go with the question. This is the question. Prepare a trial balance for Shining Brothers Private Limited at March 31st, 2024. So here they've given the examples of questions like this. So how to prepare a trial balance? Here we go. This is the answer I'm showing for the Shining Brothers Private Limited trial balance. So this is how we have to do the trial balances list, and here we have to go with the debit and credit. So in addition to error detection, the trial balance is prepared to make the necessary adjusting entries to the general ledger. It is prepared again after the adjusting entries are posted to ensure that the total debits and credits are still balanced, like this. Also, it is not an official financial statement. It is usually used internally and it's not distributed to people outside the company.
Yo guys, my name is Yuvaraj. Today I'm going to explain about the components of financial statement. These components of financial statement is divided to two parts. The first part is statement of financial position. The second part is statement of financial profit or loss. First we're gonna see the statement of financial positions. So let's go guys. Okay, here we go. We can see this is the statement of financial position. This statement of financial position has been divided to three sections, that is assets, liabilities and owner's equity. Okay, financial position is a snapshot of an organization's financial health at a specific moment. Like it shows like if asset means what the company owns, like cash or properties. If liability means what the company owes, like debit or payables. And owner's equity means the owner's shares in the company, like capital or retained earnings. This statement they provide to help people understand its ability to meet financial obligations and stay stable for a company. So here we can see one of example of statement of financial position. You have to list out the assets and equity and liabilities. The asset is divided to two parts, that is non-current asset and current assets. So you need to identify and clarify which is the current asset and which is the non-current asset. The thing is same for liability also. Liability also have non-current liabilities and current liabilities. Like non-current asset means like example land, buildings, and current asset means like cash or inventory. For liability, they also have long-term loan for non-current liabilities, and current liabilities trade or payables. These statements helps investors, leaders, and managers make smarter decisions, understand if the company can pay its bills, and see how it's doing over time. It also ensures the company is being transparent and following the rules.
For statement of profit and loss, first we need name of the business, and then the second one, statement of profit and loss, and then we have start with sales minus with return sale, we get net sales, and then the net sales we have to minus with COGS, which is the calculation is purchase minus with return purchase, and then we add with return outward minus with an inventory, we get cost of goods sold, and then we have to minus with the net sales, we get gross profit. After that we have to add with revenue, and then minus with expenses, we get net profit.